Hello everybody, welcome to another episode of Erickson TV. Curtis here with Lauren. Hello Lauren.
Hey Curtis, hey everybody.
Hey Lauren, I've been here, well of course, as most people know, the equity markets have had a very good year.
Yes,
year to date. And people have been asking me some questions, clients, and then also I've been hearing some radio ads talking about that. They're wondering if these stock market gains are in a sense phantom gains because of the easy monetary policy and things like that that the federal government has. And I thought it was interesting because I saw an article in today's USA Today talking about some of the reasons why they think the stock market's doing so well.
Oh, okay.
And I know that people kind of tend to focus on the S&P 500 and the Dow Jones, which are having great years, but also we know in part of our diversified portfolios that there are other indexes that are doing even better, for instance.
Right. Yeah.
But for purposes of this this episode, let's just talk about the S&P 500.
Okay.
And their perception is that what is continuing this growth in the stock market indexes is that corporate profits are looking very good, and that in fact for the third quarter, 67% of the corporations in the S&P 500 are outperforming the estimates, and about 20% are matching estimates, and only 13% are underperforming their estimates. So and that's pretty close to the historical averages, actually. And then number two, though, is that the second thought was, well, because of the low interest rates and because of the still high unemployment rate, companies are showing these net earnings from just cutting costs, and it's not necessarily a great economy still.
Okay.
But as a contrast to that, what they're saying here is that companies' sales are actually increasing 4 to 5% on average for the S&P 500. So what's your take on these different things that we're talking about today?
There's always something to be worried about, isn't there?
and
if people aren't worried about phantom stock gains, then they're worried that the bond market is going to collapse because interest rates have to go up, although we have no idea where interest rates are going to go. And if they're not worried about that, they can be worried that real estate isn't a bubble, or whatever it is you want to worry about. I don't know. I think people have a tendency to have made a decision that things are either good or bad, and then they will simply make up a reason to support that decision.
Right.
So if people have made the decision that things are bad, well, then the stock gains are phantom gains.
Right.
I don't really think that there's too much else going on there. I think that it's clear, though, or it should be clear, that most people weren't predicting that U.S. corporations would be doing as well now as they had been doing. And that is why the stock market went up more than it does on average.
Right.
Things did better than expected. And the one thing that I would point out that is always important to remember, if people had expected that sales would go down, and then sales went down but only by half as much as people had expected, the stock market would go up.
Yeah,
so that's what's really important. It doesn't matter really whether the economy is doing well or poorly. It matters, and that's why you can never predict this stuff. Right.
And at the end of this episode, you just made a great point that wants to finish this episode, is that for this upcoming fourth quarter, there's been a trend from the companies. They always provide guidance for future earnings, and they are providing not losses, but they're saying that we're going to reduce our. We want to lower your expectations for the fourth quarter, which actually to me bodes well, because they're saying that provides an opportunity for maybe further surprises in the future. But who knows? Like we said. But okay, good. So the takeaway is that what generally drives stock prices are earnings, and earnings have been good. So there's not really any reason to think that these are phantom gains.
Yeah, exactly.
So thank you for watching this episode of Erickson TV. We'll see you next time. Bye now.
See you next time.